Easy to dream a dream, though it's harder to live.
Welcome to the weekly market analysis. We start with the DXY on the weekly time frame. As you can see, the DXY is the pair that we use to check the strength and weakness of the dollar. So you can see if the DXY is overall bearish, means the dollar is also overall bearish. So this is what we call the dollar index. And as you can see, we've been moving from the trend line, we've been moving all the way to the downside. So this is our overall move to the downside. Let's zoom out to see the overall structure. We had that impulse from the top there, and now what we're forming from the top there, we're forming a correction to form a move to the downside. Now we're correcting slowly to that three-touch structure there, then to the downside. Remember, the three-touch structure always has the highest probability. Now we're moving to the downside, to that beginning of that correction there. That's the 90% rule. Now let's zoom into the overall structure to understand. But as you can see, it's been moving correctively, which means this could just be another correction to move back to give us that double top before continuing all the way to the downside. Well, that's another possibility within the market. But before we get that double top, we have to move to that low of the trend line there at the bottom of the trend line. Let me show you what I'm talking about on the daily time frame. Let's see the overall structure. We zoom in to see the clear picture of the structure. Now, as you can see on the daily time frame, what we have is that descending channel there. That's where we've marked there. We've marked that descending channel where we've been moving correctively. Then we are slowly reversing up to the upside before continuing our overall move to the downside. Now we have two areas that we have marked there. We could go to that first top area before going to the downside. That's one of the possibilities in the market. We could form that bigger double bottom. That one would have the highest probability. Or we have another high there, which we don't have to go there. We could just move from there and move to the downside. So that's two possibilities we're looking into the market. We're going to stack up confluence, look at the one with the highest probability. Moving in closely into the 4-hour time frame, as you can see, we had a nice ascending structure to the upside. Remember, an ascending structure is a reversal pattern and it has a higher probability when it hits an area of value. Now we have that impulse to the downside. We could be forming that correction to go all the way to the downside, or we could just correct and form an ascending channel again for the nice double top there. Within a double top, that's high probability to go to the downside. Now all we have to do is just wait for the market to give us a structure. Now today on the pair, we've added the gold versus the dollar. So on the gold versus the dollar pair, as you can see, we're moving back to that double top that we had before. And the way we are moving, you see that on the daily time frame, how we've been moving to that double top. First we had that double top from there, and after that what we had is a downward movement. Let me zoom in for you so you can see the downward movement that I am talking about. So this downward movement I'm talking about, we had this impulse correction, impulse, that correction, and impulse correction. We've been moving that way, impulse correction, forming that lower lows and higher lows. Then we had that double top before we went all the way to the upside. So we go now, we are still continuing that move to the upside to that high that we have marked it there. So let's move in and focus on our upwards movement. And as you can see on that upwards movement, we had this impulse. Let me mark it. Let me mark this impulse that I'm talking about. We had this impulse. Now we're correcting all the way to the downside. Now we're forming another impulse up. So we're gonna have to wait for another correction, then another impulse before reaching that area. So we could get in there and take longs to the upside and enter there. So let's move to the 4-hour time frame to see clearly into the structure. Okay, maybe a problem there. Okay, on the 4-hour time frame, you can see that's the correction I've been talking about. You can see clearly that the market looked like it was reversing, but the market just reversed out of nowhere. So that was just our correction. Now, as you can see, the market is now continued in our overall upwards direction. Now, as you can see, what we are waiting for is because we had that impulse. What we're waiting for is a correction for us to take an entry and finish up that move to the upside. That's what we are waiting for. See that correction to finish up that move to the upside. Now let's move into our top 6 pairs. First, on our top 6 pairs, we have the USDJPY. So on the USDJPY, I'm gonna mark the highs and the low. I'm gonna mark that higher high. This is the highest high we formed, and to get to that high, we broke up above this high. This is our previous high. We can mark that highs and our lows there. Let me mark this low, even though it does not hold any significance at this moment. So we're just gonna mark it to show that our overall structure there. Now we broke out this previous high that I have marked. We broke out with a bit of impulse there, but how did the market move after it broke out? Moved structurally. You can see it moved with impulse correction, impulse correction. Let me move to the daily so you can see it clearly. On the daily time frame, you could see what we formed. We formed that ascending channel to the upside, which has the highest probability to reverse, especially if it's a three-touch structure. Like I said, it's a 1 2 3. As you can see, we had that 1 2 3 with the middle structure. We broke out a bit there, but we formed that nice shooting star candle to go to the downside, that bigger candle before going to the downside. Now, as you can see on this impulse that we have to the downside, on the last part of that impulse, we've been moving correctively, and now we could just continue there and then continue to the downside. We could continue that move to the downside there. That's what we're waiting for. But now, looking at the previous movement, we have been moving in an ascending nature. So we could see we already had fill up that ascending nature. We fill up the 90% of that ascending nature. Let me move on the 4-hour time frame so you can see what I'm talking about. Let me mark that we have formed the double top on the beginning of that ascending nature to the downside. See, the market has been moving to the correction. We fill up almost 90% of that. This means we are likely to reverse. Let me mark that ascending. This is our ascending structure that I'm talking about. And then we have inside that structure, we've been moving correctively. So let me mark the beginning. This is the beginning of that structure. We form the double top with the structure. So the double top, we could reverse from there, it go all the way downside and start with ourselves. So now we're inside this double top structure. As you can see, we are moving from that ascending nature, which was our reversal. And we can see in the ascending nature, we also filled up the 90% of that. So we're moving that impulse correction, then impulse to the downside. So this is what we could have. And if we come back to retest that area and to the downside, that could be the highest probability to show that we are going to the downside. Now zooming into the structure, let me show you the double top. Let me stack up some confluence to increase the probability to see if we are reversing from that double top, if we really had enough momentum to go to the downside. As you can see, we had an ascending channel, tiny bit of ascending channel, a two-touch structure there, but it's in align with the double top there, so it makes sense why it reversed at that moment. So you can see it gave us that impulse. Now we're forming this correction, which could just give us another impulse to the downside. So that's how the market moves. Impulse correction. Does not need rocket science, just as obvious as that. Moving into the 1-hour time frame, now we are forming this correction. From the way we see that correction on the high, we have not yet confirmed anything. We can't say, yeah, we had that bit of a two-touch structure, but I'm just going to mark it with a ray line because I understand that we could have that probability there to complete our expanding channel at that top, or we could break a little bit above that ascending channel before going to the upside. But looking into the structure, you could see the market has been forming some bit of correction within that correction. Or we could just have this flag here because we had that impulse, then we could just correct there and go to the downside. So We are looking out for every possibilities within the market that could happen, and we're preparing for each. So let's move on to the second pair on our top 6. This is the CADJPY. So closely looking at the CADJPY, we had that double top there at the CADJPY, and you can see that within the double top we formed a mini double top there. We formed the double top within the double top, so that has the highest probability for us to be reversing to the downside. And within that we had an ascending channel to the upside. You can see we had that ascending channel to the upside, which holds the highest probability. Staking it up with the double top, that mini double top we had there, it gave us that impulse. Now we're forming that correction. We could just form a two-touch structure before going to the downside. Could be just a two-touch flag to the downside. So moving into the daily, you can see on the daily we had this impulse correction, impulse correction, impulse. So that's how the market has been moving. Now this gave us a bigger impulse, then we're correcting, then we're expecting another bigger impulse to the downside to continue with our move to the downside. Now as you can see within the market, let me mark this high here. You can see what we are forming there is just a flag to continue our move to the downside. So nothing has been confirmed yet on the low, so I'm going to use the ray line to mark that. Let me remove this one to have clean chart. You can see now we have a clean chart. It's no longer relevant, that ray line there. Let's move into our continuation structure that I've just pointed out. So let's adjust that trend line there at the top. We're adjusting the trend line at the top for accuracy. So let's move back into the structure. Let me zoom in into the structure. Okay, zoom in a little bit for clearer picture. Okay, let me zoom in, press that plus, yeah. And then what we have within the structures, you can see we had this ascending to the top. Like I said, this ascending has highest probability. It's its highest probable pattern for reversal. Now you can see we had that supporting trend line at the top. So the supporting trend line at the top, from there let's adjust it a little bit, because I like to mark the trend lines to the week just to increase the accuracy within it. Now it gave us that impulse, we formed that correction to go to the downside. As you can see, the CADJPY and the USDJPY are correlating pairs. They move in similar fashion, even though they're slightly different, but they move in similar fashion. So the CADJPY and the USDJPY could be giving us the same market nature. Now let's mark that high there. Let's mark that high and go to the 1 hour time frame. Okay, let me move to inside the structure. We have to move into a correction and refine it. You can see we had that high there. Nothing is yet confirmed from the top of the structure, and then this is what we have. We're expecting that to form a continuation. The same thing we're expecting the USDJPY, we are expecting on the CADJPY. So there's another possibility within the market. So we look for a different scenario within the market and we prepare in advance for that. And this is what could just happen. And the reason I'm saying this could form a flag and continue to the downside is because of this impulse and give us this correction, then this impulse. As you can see what I'm talking about, we had that impulse. This is the third pair on our top 6. This is the EURNZD. As you can see, let's zoom out to see the overall structure. First start by marking our highs there. You can see we had that high there. We can mark this low there, which is not relevant. This is not relevant at the moment, but you can still mark it. And then as you can see, let's look at the market nature. Remember, after marking our lows and high, we look at the market nature from the top. We had that impulse, we formed this tiny bit correction, which much more over came back to form a bigger correction. Now we're expecting a move to the downside, and I'm going to show you why we're saying we expect a move to the downside. Let's just form that correction continuation structure there. This is a continuation structure. You can see it's a flag to the upside. It's a flag to the upside. As you can see within it, So this thing, it's a correction. We have a 1, 2, 3 touch structure. Like I've said, the 3 touch structure has the highest probability. So now we have a high probable structure. Within the structure, we are forming a double top. So we're staking conflicts within conflicts. A double top, it's a reversal to the downside. Our structure is a continuation to the downside. Now let's move in within the structure. Let me adjust that ray line there. So as you can see, we are forming this corrective structure. We've been forming this corrective structure to the upside. We're expecting it to go there to the double top before continuing a move to the downside. Now let's just mark this channel. Let me just redraw this channel for you to see clearly what I'm talking about. Let me add its support. It's a resisting trend line there. It's a resistance trend line. Resisting trend line there at the downside. Let's move to the 4-hour to zoom in inside the trend line to see what's really happening within the trend line. So we're gonna adjust the trend line. As you can see, we haven't broke out of that trend line. You can see because we're forming some sort of double bottom there at that bottom. So it's very accurate to say we can adjust now because we did retest that trend line there. Let me show you what I'm talking about. You see there, we retest that trend line. Now what are we expecting from this market nature that we got? So let me adjust that at the top first. So from this market nature that we have got, you can see that what we're expecting is a move. What we are expecting is a move to the downside. We're just forming that sort of double bottom there, which could give us enough momentum to go to the upside before actually start with our short trades. Now that's a nice double bottom there. Or another possibility within the market, if we impulse and form a correction, we'll definitely take that and take that move to the downside. But if we're looking at this, actually this is just the structure to continue move to the upside, then start with our short. So this is just forming a structure to give us momentum to go to the upside and start with a sell. Now moving on our fourth pair on the top 6 at the USDCAD, let's mark our highs and lows. There you can see low. Okay, let me mark this low here, and then you can see we have another high there. Within that, we're forming some sort of double top. If that's impulse, now we've been moving correctively. So like I've said, if we're moving correctively, it means we don't have enough momentum to go to that upside. You can see we created some one leg impulse there. Now we're forming, retesting that area to go to the downside. Now this is our beginning of our sells at the double top there. This is what we're looking for. But now we had this flag here. Let me mark this channel. This flag. Why I call it a flag? Because we had that previous impulse that I have outlined, but now we have broke out. But now, how did we break out and what happened after we broke out? What happened after we broke out is that we just had that one impulse, then we formed this double top, usually expecting to still sell. Let's go to the daily time frame so you can see what I'm talking about there. At the top of the structure, let me adjust that structure so that you can see clearly what I'm talking about. Zoom in because I want us to focus at that structure there. We're having this double top. This is what we're expecting from the market to go to the downside. You can see we just slightly close there to form the double top before actually starting with our sells. Now let's move to the 4-hour to go much deeper into that last leg of the double top that we're expecting. Zoom out. Now let's mark the beginning. You can see we moved there correctively. So let me show you where we started. We started moving correctively from this area that I've marked this low, and then here I can see that we're forming even a correction to move to the upside before starting with our sell. You can see this is just a continuation structure to that upside. We could continue to that double top or break above the double top slightly before continuing with our sell. So what's going to matter is how we broke out before continuing with our sells. You can see this starts from the USDCAD, as simple as you can see it. Now we're on the 5th pair on our top 6. Now we have the GBPUSD. Well, as you can see, this one is just Very beautiful. From the way it moves, it just, if it goes down for a long time. You can see it's not a pair that, likes to trigger a lot. Let's mark that low there. And we can see we broke out this low. To form that low, we broke out this low of the structure. You can see something about this pair is that when it reverses, we have that wicks there. Now we impulse to the downside before impulsing back into that trend line. Now we form a continuation to continue to the upside. Let me show you what I'm talking about on the daily time frame. As you can see, let me remove that trend line there, just for us to have a clear structure, because we have already broken out of it. Now it has less relevance to what we're looking for within the market. So because we broke it, now we're always looking for that lowest low. Now within the structure, we're forming a continuation, just like some sort of expanding a flag. Actually, it's a flag to the upside. Now if we move in within that flag, you can see and understand why I say we're looking for that impulse move correction and impulse to the upside. You can see it once I zoom in into the structure. And let me zoom in, go to the 4-hour time frame. Now we're deeply into the structure. Now we go in and we look at the market nature of the structure and look at what we see. First, let me adjust this trend line. Now you can see we formed this descending channel to the downside. Like I said, at the area of value, the descending channel is always a reversal. Now you can see we had that impulse to the upside after that 1-2 on the third touch there. Now let's mark this low that we're forming. Let's mark that high there that we're forming. Nice structure. The impulse correction, boom, waiting for the impulse to the downside. Or what we could just hover around at that ray line there before actually breaking out to the upside. So that's another possibility within the market. We are very aware of that, and we are going to take the trade if the market forms it. So but now let me move deeper into that structure. I want you to see something. So the market is giving us a nice head and shoulders there. You're going to see it once I draw it. You can see that's a nice head and shoulder. Then we could just move to the upside from that head and shoulder. This makes sense why we're looking for an overall move to the upside. Now the last pair on our top 6, we have the NZDUSD. So I'm going to quickly wrap up on this one. The NZDUSD, let me mark the highs there. This is our highest high that we're going to look at, and this is our low that we're going to look at. From this low, you can see we formed the double bottom there. You see that's the first touch of the double bottom, the second leg of the double bottom. So now this makes sense why we're looking for that upside. Well, it makes sense for us to be looking for buys at this moment. This makes sense why we're looking for buys at this moment. Let's go to the daily time frame so you can understand what I'm actually talking about. Let me zoom in. Let me mark that continuation structure. I want you to see what I'm actually talking about. Okay, let me mark that continuation structure there. Now you can see it's forming some sort of expanding. It is an expanding structure, which to the upside you can see the NZDUSD looks similar to the GBPUSD. The same way the CADJPY looks similar to the USDJPY. So there's correlation within the structures. Now let's zoom in into the structure. As you can see, the same way, like I said, the NZD looks similar to the GBPUSD, because at the GBPUSD we had a channel there, and also here now we're forming this channel here, this nice channel, and from this nice channel you could see we're waiting for move to the upside. Now the same way we have said in the GBPUSD, you can see we also here we are forming a nice head and shoulder there. Look at the correlation that I'm talking about. We're forming that nice head and shoulders to form that move to the upside. Now, what are we expecting from this head and shoulders? We're expecting an impulse to the upside. Let me show you. Let me take previous structure so you can see what we're expecting. Expecting this impulse to the upside, and then we're gonna form that correction from there. That's the correction I'm expecting the market to give us. That's the correction. Then boom, from that correction we take our entry there.
Gonna let me for my ambition. Easy to dream a dream, though it's harder to